Do you guys feel like whenever the market goes down, you don't get in at the right price? It seems like you always get in too early and then things go down more, or you get in too late. I'm going to show you guys one thing, just one thing you can do to not accurately, but pretty darn close, time the market. But what's going on, y'all? Hope all is well. Another beautiful day in Jacksonville. Of course, Mario Payne, a certified financial planner. I've managed over $250 million in assets over 16 years. But on these YouTube streets, I just give information. Before we get started, like always, like, subscribe, share to our channel. As we continue to grow, we grow with each other. But we're going to talk about today what one indicator can help us when timing the market. Now, it's that old adage, it's time in the market, not timing the market, but it's one indicator over the long, whoa, Mario, over the long term that may help you. Here we go.
Investors can be emotional, and you can profit from that. CNN Money's Fear and Greed Index can help.
So yes, we are definitely emotional, right? It's the old adage, think with your heart, but move with the charts. And a lot of times we don't do that. Me as a certified financial planner, I don't always do that. I look at the charts, something's going down, I should get out of it. Like, man, it's going to go back up, and I hold on to it. Or something's going up, you're like, man, I'm just going to wait till it goes down, and you miss out on your opportunity. So I get it wrong as well. But this indicator can help us when it comes to when we should get in or when we should get out.
Reveals when traders are too bullish or too bearish, giving you a chance to take the other side. Here's how it works. Our Fear and Greed Index tracks 7 indicators of investor sentiment. The most well-known factor is the Volatility Index, or VIX for short.
We all know what volatility is, right? Clients do not want their investments to be volatile. But the more volatile the investments are, the more money you can make if you buy low or you sell the higher price. Look at Bitcoin, right? I believe this halving is going to be a lot less volatile than the halving that we had in 2017. So when that happens and we have that 5-year cycle, the highs get higher if we're more volatile and the lows get lower, right? Bitcoin going down by 70% probably is not going to happen this time around like it did last time. So the more volatility, maybe the better if we time the market. But for a client or us looking at our money, we probably don't want to have our stuff as volatile. So that's one of the things that it studies.
When stocks fall, the VIX usually goes higher, and the Fear and Greed Index swings toward fear. When stocks rise, the VIX goes down, and our index swings toward greed. There's also market momentum, the number of stocks hitting new highs versus new lows, and the volume of shares going up compared to going down.
So we think about momentum, right? We can look at that 2 different ways. If a stock is trending up or it has momentum. But as it gets to the top, we don't know what the top is. So a lot of times people use momentum as a not good thing, but bad thing. As it's breaking out, growing, they take profits, which you sell investments at the top. We hope it's at the top. Now, like NVIDIA, I sold some NVIDIA last year, half actually, in July. I was wrong. It was up by 200%. I'm like, man, it can't run that much more. It went up another 300%. So, you know, you're not always right there either.
Now, it's not just about stocks either. The index looks at demand for risky junk bonds, safer treasuries, and stock market options. We weight them equally to get a final reading between 0 and 100. Lower numbers signal fear and higher numbers indicate greed. But let's get back to you. How the Fear and Greed Index can make you money.
That's all about. I mean, we can look at all the indicators. We can look at the market is going good. Should we buy? Going down? Should we sell? But it's up to you to make a decision. And they're going to tell you why you are important when it comes to making your decisions, not anybody else.
Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. But when investors get too greedy, that may mean stocks are due for a dip.
Show me the money, right? And people thought that happened at the end of last year. The market definitely grew dramatically from October to December. Me personally, some of our clients, we got out the market. Not everything, but we did get out. Now, looking back at things, right, as the market went up in January, February, and March, had its best quarter from a NASDAQ standpoint in almost 15 years. But we always say, no one's upset with the profit. My profiteers.
Don't take it from me. As Warren Buffett famously said, Be fearful when others are greedy, and greedy when others are fearful. Happy trading.
So now, my profiteers, we're going to look at this index and see exactly how it correlates with the market and how we can use the index to our advantage when we're in the market and we're out the market as well. Now, my profiteers, here we go. Right now, as of the previous close, people were fearful because the market went down. We have a lot of fear right now with what's going on in Iran and Israel. Prayerfully, everybody be cool, cooler heads prevail. But before we get started, like, subscribe, share to our channel. We're dropping game to you guys, man. So definitely get those likes and subscribes up. But right now, it's fear. We're fearful. Last month, it was greed, right? Because yes, remember, we was coming out of March. In March, we had the best quarter from a NASDAQ standpoint in 15 years. So we was a lot more greedy. And it shows, right? This month, the market's been down. Yes, case in point to the wars, but the market looks like it's topping out, and it's headed down over the past few weeks. The past week, neutral, last 1 year, greed. So again, you think about it, over the past year, we've been greedy. So that might sense that it might be some market turbulence. I like at things on extremes though. Like for me, that's the best buying opportunity, right? If we have extreme fear, and I don't look at things over a week or a month, I look at over a year because we are investing. Now, if you're trading, you might want to look at things closer to the day or the week. If we're swing trading, maybe month to month. But as an investor, we look at things over the course of a year because it kind of gives us a synopsis over the next 6 to 12 months. And over the past year, we've been greedy, not extreme greed, right? If this number was closer, instead of 67, closer to 75, 80, 85, probably would start taking profits, right? Taking profits, getting some money out the market because it's probably a higher probability that it's going to go down and not up. Extreme fear, 25 or less. When everybody is fearful, that's probably when I want to buy, right? The market's down probably dramatically. And when the market's down, that gives us the opportunity to have our money grow over time. And some of the indicators as we look now, right? S&P 500 compared to its 125-day moving average. Now, the moving average is the average price of the stock. And typically, the stock likes to kind of be buyer in between this moving average, right? When we're below the moving average, that's a buy opportunity. And then, of course, when we're above our moving average, it's probably a sell opportunity. As we can see, the S&P has been rolling down, and right now we're at neutral. Stock price strength, right? So that means new 52-week highs. Now, this is very important because when new 52 weeks highs happen, that means we're in euphoria. Things are going up and companies are making more money than what they made over the past year. But it's fear right now, a big fear signal. A few big stocks can skew returns, right? We know that because your NVIDIAs, Microsofts, Apples, Metas, they continue to hit 52-week highs. So those big stocks are actually negating what really the market's going through, right? The past month, half of the stocks in the S&P 500 hit 1 month lows, right? So fear. Stock breadth. The market's made up of thousands of stocks. At any given day, investors are actively buying and selling, right? So it's fear. So that means there's a whole bunch of sales, right? And the thought process is the market's going to go down. Yeah, maybe. Put call options. Extreme fear, right? That means a lot more people are putting in puts than calls. The more puts that we have, then that means more people think the market's going to go down. The more calls that we have, that means people are buying something because they think the market's going to go up, right? And of course, volatility, as we can see with the VIX, that's the moving average of the VIX, right? So let's look here in October, right? The VIX was very, very high in October. People was fearful. Let's look what happened on October 20th, 2023. Well, look at here, profiteers, literally. Right? October 23rd, 2023, at its peak, people were most fearful. And we can understand why, right? From July to October, we had a 10% downturn in the market. Oh my gosh, the gains of 2023, they're going down. And that's when most people were fearful. We was at the top. But my profiteers, look what happened after that, right? If we bought when people had extreme fear in late 2023, as high as move, man, 27%. But even today with some of the pullback at 22%, because the market's down about 5% over the past 3 weeks. So that just goes to show using the fear and greed index to your advantage. Right? We look extreme fear with the VIX at 21, the highest it was in the course of the year. So we talk about when to buy, awesome time to buy, right? And yes, you probably want to see the dip, but then it go back up. So like that double dip, probably the best time to buy there. And then of course, as the market starts going up, our fear goes down, right? And as we can see, went down more. And we know in December, we had a little pop on the downside, right? So of course in December, look at that, right? Went down. So as people are now greedy, look what happened to the market, right? We had a 1, 2, 3, 4 week dip. When everybody was greedy, the market went down and then it recovered. And now, as you can see, as of April 15th, starting to speak down, right? So the fear that people have is sitting again, right? Now, not as high as what it was for the VIX standpoint at 2022. And the market is turning around. So it can be deceiving as well. But it just shows when we have this huge increase of fear, best time to buy. And right now, extremely fearful. So some people might think right now it's a good time to buy. I don't know about that. Long term, yes, because you are buying something at a 5% discount. But yeah. And then also safe haven. Stocks are riskier than bonds, but the reward for investing in stocks over the long haul is greater. But still, bonds cannot perform stocks over the short time. Safe haven demand, which is important, shows the difference between treasury bond and stock returns over the past 20 trading days, right? So basically for a month. Bonds do better when investors are scared. The fear and greed index uses increasing safe haven demand as a signal of fear. So right now, as we can see how low we are, extremely fearful. So a lot more people are going into bonds. And when people are going to bonds, then that means stocks are probably going down. So we're able to buy stocks at a lower price. Again, we look here, right? It was all the way down to 3.31% in mid-October, and the market spiked. And then as we can see going into December, right, when individuals were extremely greedy and they were buying stocks and not bonds, it went down. So we see these tops, right? July 2013, great time to sell, right? Great time to buy, August. And as we can see what happened in August, whoop, 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 right? Went down. August, had a little cup, not always right, but had a little cup up. Then again, this big one, right? We want these big ones, right? This 7%, 8%, excuse me, 6.9%. Here as well, right? March. We know month of March, great. Month of April, not so much. And as we can see, it's rolling on down, right? So as the fear continues, might be a buying opportunity. Maybe not now because we're at 1.62%. But I would think as we get to 3.3%, very low, maybe another month from now, if the market continues to go down, we get more fearful. That, my profiteers, is when we want to get in my opinion. And then also junk bonds. And of course, very, very greedy right now, right? We know that because yields are higher than usual. So we're greedy. So I don't know if we can use this to our advantage. But in totality, with the fear and greed index, as you can see, fear is driving the market. And again, we look from a timeline standpoint, right? But overview, fear is definitely driving the market. Last month, we've been greedy, and actually the past month, the market's going down. I would look at things to be extremely fearful. So right now, we're fearful now the past close. If we continue the market being down and the uncertainty of war, we're going to see this 1 month shift from being greedy to fearful to make extremely fearful. If that happens, my profiteers, that is an indicator we want to look at when we maybe get into the market. So my profiteers, I hope that helps. A lot of good information. Again, like, subscribe, share to our channel. Let me know, do you guys use the fear greed index? Does it work? Does it not work? Is it any indicators that you guys use? If so, comment below. We'd love to get more information. The more that we share, the more we grow together. Anyways, love is love. Let's make some painful profits together, y'all. Peace.
making no money mistakes. Make a payment on your bills and you still late, yeah. Painful profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes. Make a payment on your bills and you still late, Painful profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different, you know.